Bismillah ar-Rahman ar-Rahim. In the previous meetings, we talked about the average rate of return and the measure of risk. We measure the rate of return by using the rate of return, the average rate of return, or arithmetic rate of return, and we measure risk by using sigma and the standard deviation. So in the previous sections, we talk about R, or the average of R, and we calculate the sigma and variance. Today, I'm going to talk about the geometric. To give more light on the geometric, we will compare between the geometric and arithmetic average rate of return. The first question is, what is the difference between geometric and arithmetic? Okay? What is geometric and what is the arithmetic? Okay. Arithmetic average may not always capture the true rate of return on an investment. In some cases, geometric or compounded be more appropriate measure of return. Because the arithmetic has some weaknesses in estimating the rate of return, so we apply the geometric to address the weaknesses of the arithmetic, or the arithmetic rate of return. For example, suppose you bought a stock for $25. We bought this stock at $45. Okay. After 1 year, the stock rises to $30, then become $30. And in the second year, it falls to $15. So it goes to $15. What was the average rate on this investment? What is the average rate of this investment? This is very, very simple. What we can do, it's started 30, then 25, then 15. Okay, so 30, 25, and 15. Now, the return, you apply the equation of the previous section. The equation was P1 minus P naught divided by B naught. Okay? So 25, sorry, we start by 25.
25,
then 30, yes, started by 25, then 30, then 15. So in this here, 30 minus 25 divided by 25. Then 15 minus 30 divided by 30. 20%. And this, the second, minus 50%. So the average is 20% plus minus 50%. So divided by 2. So 20 minus 50 is minus 30 is then minus 15%. Is it right? Okay? So this is the average rate of return. This is the average rate of return based on the arithmetic methods. How we calculate this, just 30 minus 25, then 15 minus 30. We calculated in this. And you see this result, 15%. But if we calculate in different ways, consider this case. What we've done, or how we calculated the arithmetic, we consider the average is based on the periodical average, or yearly return. So we calculate the yearly return, or this return for this period, and the return of this period, and we take the average. Okay? But consider that we started from this point, $25, and we end with this point, $15. Is this. So we consider that this is the starting point, and this is the ending point. In this case, the price moved from $25 into the $15. So calculate the growth, or see the growth return. If we consider this as the x and y axis, this is x axis and this is y axis, in the average return, the price is moving from 25 to 30, then 30 to 15. But in the geometric is considering the movement of all of this from 25 to 15. In other words, the geometric considering the growth rate of return, or the growth of the return. The arithmetic, again, is based on the simple average rate of return. Based on the simple average rate of return. However, the geometric is based on the compounded rate of return. Okay, the compounded. The arithmetic calculate based on the yearly or daily or periodically rate of return. However, the geometric calculate on all periods one time. Consider the period as a one time. How we calculate geometric? The geometric is calculated like this. Geometric is equal the roots, the n roots of the summation of 1, or the multiplied of 1 plus r minus 1. And consider this is what Ri. Let's go back to the previous example. In the previous example, we started by 25, then 30, then go down to $15. And as we calculate the average, 30, 25, and 15, here the average, how much would this average? No, this one. 20%, and here is minus 50. So how we calculate this on this equation is like this. 1 plus 0.20 times 1 minus 50, or 0.50. Okay? And raised to the power 1 divided by 2 minus 1. So what is the result?
Negative 22.5.
22.5. 22.5, are you sure?
Negative.
Are you sure? See? It should be. Double check. Yes. 22.54. Minus 20 is less than minus 15. Okay, careful. This is minus. So, however, over 2 years, the 25 stock lost. So, what exactly is like we consider this, but this is the slope of, or this is the growth rate. Is moving from 25 to $15. So we will consider this is because it moved through periods of time. It's a growth from 25 to 15. It doesn't mean that's just this is in one click 25 to 15. It goes through the period of time. It goes through years, goes through the days. So the idea is the geometric is the multiplied of the return in the road of the movements. Okay. So here is in the arithmetic minus 15% is the simple arithmetic average, while the minus 22% is the geometric compounded average.
Yeah.
Okay. Which one is more correct? It depends. Some financial analysts, they prefer to apply geometric, because geometric reflect the risk of the business. Okay. Others prefer the average or the arithmetic, because arithmetic reflects the periods of return. If you calculate based on the yearly return, so it is fine to apply the arithmetic. If you are want to reflect risk or to reflect the growth or compounded rate of return, it is fine to apply geometric. So again, the geometric average rate of return answers the question, what was the growth rate of your investments? So in this case, the growth rate is minus 22%. But if we talk about the arithmetic, arithmetic is not reflected the growth rate of return. Is the arithmetic reflecting the summation of the periods and not considering the whole periods of the investments?
Daily.
The arithmetic average rate of return answered the question, what was the average of the yearly rate of return? Yearly or daily rate of return or quarterly rate of return. I'm not considering the whole investment or the whole performance of the investments. Again, the geometric is calculated based on this 1 plus rate of return time the rate of return of the second year and till year end raised to the power 1 divided by n, which is, we can put it under roots, minus 1. Okay. Computing geometric rate of return, we did this. We don't need this 25.
It's different.
Okay, so if we have this stock, this is different one. We start the business by $25. We can do it again. This one. We started by $25. Then in the first year, so our initial investment $25. Our initial investment. When I said initial investments, consider this streamline, starting by 0, 1, 2. Initial investment starting by 25, then at the end of the year is $35, then at the end of the second year is 17.5. So by using the chart, in this chart, so in 0 here started by 25, this is 5, this is 10, 20, 25, so it was in here. Okay, 25. Then it moves to, in the second year, it moves to 35. This is 35. Then in the second year, it moved to the 17.5. So let's go in here. Okay. So the growth rates based on the geometric average is minus. So it was here 25, and then 35, and here is 17.5. If we want to calculate the average rate of return for the arithmetic, just go this 25, 35, and 17.5. Do like this: 35 minus 25 divided by 25, and then 17.5 minus 35 divided by 17.5. Sorry? Okay, so this is 40%, and this is minus 50%. Then 40% minus 50% divided by 2, we have minus 5%. Minus 5%. This is based on the arithmetic.
Yeah. Yes.
Okay, based on the arithmetic. But if you look at here, it means just if we want to reflect 5% on the chart, so at 25, it goes down 5%. It means 25 times 0.95%. Is it right?
Yes.
So how much?
23.75.
Yes, 23. So it moves to this here, 23. Okay. Is it right? according to the average, the price dropped to the 23, but this is not right. It dropped to the 17.5. This is why it is the arithmetic is not reflecting the investment in the whole period. It's just is the average of the periods. But go back to the to calculate the geometric. The geometric is 40%. Just do it in this way. 1.40 times 0.50. Okay. Raised to the power 1 divided by 2 minus 1.
Which is equal negative 16.3%.
Negative
16.
16 point something.
مش 50 مش حقتها 1.5
هي واحد ناقص
مع واحد 1
ما هي
plus
موجب
minus
طلعت
50.
ال 50
1 plus minus 50%. This is minus.
بعدين مش على 17 ونص
على okay. You're right. Okay. Okay. So minus 50% is minus 1. And you will see in this here. Apply this equation and try to see $25 times 1 minus 60.33. Okay, anyway, look at in your left hand side, is measure the annual rate of return.
next year.
Okay, for the next year. What annual rate of return can we expect over a multi-year horizon? So in this case here, if you expect for the next year, it's fine to apply the arithmetic. But if you expect for over a multi-year, 3 years and moreover, the geometric is much better than the arithmetic. See this checkpoints. In this checkpoint, 5 years ago, Mary's grandma gave her $10,000 worth of stock in shares. So she started by $10,000. So this is the initial value of the investment. Mary is now considering whether she should continue to hold the shares or perhaps sell some of them. Her first step in analyzing the investment is to evaluate the rate of return she has earned over the past 5 years. So she wants to evaluate to decide whether she performed well or underperformed. So the following table, this is the table, and we will see how we can apply the geometric or we apply the arithmetic, and we will see. So this is the value of the stock, and this is the annual rate of return. How we calculated this? We calculated this based on this. I will show you how we can apply Excel. If you are interested in Excel, why I'm applying Excel? Because in your assignments, I think it's important to apply Excel. I think, yes. You try. So this is year and 0, 1, 2. I don't like to listen to this.
Why?
Because you have to know.
I have, but I don't have time.
So bring your time with you. You are a student, you know. Sorry? Okay. Value of the stock. So we started by 10,000. Okay.
Then 11.
And in the second year,
11.
11,000.
حلها بالافريج.
All of them. Okay.
تطلع 11.
دكتور الثانية ليش هيك بتيجي خطوط مع بعض الثانية؟ ثاني واحدة ثاني قيمة بعد ال 10,000.
Is dry this?
Yes.
Okay.
مليون هذه.
Okay.
مليون.
Now, what is the annual?
ثانية
11,000.
Okay. Now, the average, according to 11,000 minus 10,000
divided by 10,000.
divided by
10,000.
10,000. Okay? And just double click. Okay? Now, if you want to convert to the as a percentage, you say this is as a percentage. Okay. Now we want to calculate the average. The average rate of return is the average is equal average. And this is the average. That's it. 8%. If we want to calculate the geometric, fortunately, the Excel help us to use geometric because it has built-in function. Built-in function. So they have function. So just little change because geometric not accept values with the negative sign.
Yes.
So we have to try to do it in different way. It is the same. Calculate it. You can do it in average as well. You can do this in average. I will show you how it works in average. Okay, this B1 divided by B notes. Okay, and so to calculate geometric is equal geometric. Just try geometric. Okay, and apply this.
minus 1.
And close this minus 1. This is the geometric.
Yes.
You can apply the average based on this. You don't need to calculate this. I will show you how it works. Okay, leave this. Suppose we don't have this one. Okay, it's equal the average. Okay, this is the average minus 1. That's it. Okay, so this is the average rate of return, and this is the geometric. Okay, as we observe, the geometric is less than the average. Okay, let's go back to our example in here. Remind me to talk about your assignments in the last 5 minutes. Okay. If you want to draw the charts for this one, okay, in Excel, it's important to apply your skills. Okay, So this is the chart in Excel. So this is the year from, you can change the year, 0 to year 4, you can change them to be, change them like to be 1. So in the year 1 here, this is the year 0, year 1, then 2, 3. If we want to picture what exactly geometric, it's fine to see the geometric is like this. Is the slope of this, is the slope of this area here, the tan theta. This is from the arithmetic point of view. Let's see how it works, to see exactly what it means, what is the difference between geometric and the arithmetic. The geometric is the movement from this point to this point. Okay? And we consider this as linear movement. This is the growth. It's a growth from here to this point. But the arithmetic is only considering the separate periods of time. Let's imagine this. This line consider the geometric, or consider the growth rates, and I think there's some moving average things here. Okay, so this is the idea of geometric comparing with the arithmetic. Okay. And we see the fluctuation of this, and we answer the problem. Okay, this is the arithmetic. Sorry, another example. This is another example. You can apply similar to. This is starting by 10,000, and you can apply similar to this one. What determines the stock prices? This is very important. And this is a big question. What determines the stock prices? Information. Okay, you are right. Information. Sorry? What else? What do you mean by information?
Information about the market.
Sorry?
Information about the market.
Information about the market. So if you want to invest in Baltil, you are looking on information about the markets, not Baltil.
يعني بشكل عام.
In general, what is the information you are looking for?
About the stocks, the price of the stocks.
You are right, but I want to know what is the level of your in-depth understanding. Information, okay? So if you talk about Baltil, the information, how many employees working in Baltil? Okay, no. What is the profit of Baltil?
Yes.
You can talk about this, okay?
How many investors?
How many investors?
Yes.
Okay.
It will affect my shares or in it.
Okay. Yes. You can talk about the liquidity.
Yes.
You can talk about the income statement. You can talk about the profitability ratios. You can talk about it. This is fundamental information. So we can categorize information into 3 main levels. The historical information about the past performance of the price. We can talk about the fundamental information, which is publicly available to the investors. And we can talk about the private information. Private information. Private information. This type of information is for the insiders. I don't mean that the insider, the people who are working in the business. It doesn't mean like this. It means even the owners, they don't know the mechanisms of the financial markets. They have the speculators, they have the insiders, The insiders, let's see, the dealers may know what is the level of demand and supply on a particular stocks. This is inside information. We will explain this in the investments, in depth or in details in the investments, what is exactly the information means. So the prices generally is influenced by information, and the information is related to the individual stocks. So in short, prices tend to go up when there is a good news, good information about the market, and they go down when there is bad news. And if we have good news minus bad news, so we have zero news. Okay, things not going like this. The last trend in research, people influenced in the bad news more than in the good news.
Yes.
For instance, yes, if you have issues of your friends, you influenced issues, concerns. If you have trouble with your friends, you remember these issues more than if you have a good friendship. Okay? So people reflecting the bad news more than the good news. So the sum of good news minus bad news is not equal zero. Is equal minus. Okay? So this is the personal life, and this is because the stocks at the end of the day reflected the bad news and good news. But people, when take their decisions, they reflected more on the bad news than the good news. Okay? Since United States businesses have generally done well over the past 80 years, the stock returns have also been favorable. This leads us to talk about the efficient market hypothesis. If we talk about the information, some stocks reflect the information properly, others they don't reflect the information. So we have efficient markets and we have inefficient markets. The efficient markets reflected the information. And based on this understanding, we categorize efficient markets into three categories. So the efficient market hypothesis states that securities prices accurately reflect future expected cash flows. So the information is helping us to expect what is the future cash flow, and are based on information available to investors. An efficient market is a market in which all available information, including the private information, the public available information, and the historical information, these information should be reflected in the stock price. Not this only, it also the speed in which the stock reflects this information. So we have two conditions. The first one is the information reflected in the price. The second condition, the speed in which the price reflects the information. But this is because this is a very fundamental book. It's just considering whether the information is reflected in the price or not. Other books, they are talking about the speed of the price adjustment. So the efficient market is market in which all available information is fully incorporated in the prices of the securities, and the returns the investors earn to their investment cannot be predicted. You cannot predict, even if you have announcements, you hear for the announcement, so it is hard to predict where is the price going. And this is remind us to talk about the random walk. Okay? If we talk about the efficient markets, then the price follows a random walk. You don't know. Whereas this is in the efficient markets. And we can categorize them into three levels: weak form, semi-strong, the strong market. The weak markets, as reflected the historical prices. The semi-strong is the fundamental and the publicly available information. The strong market reflects all of the information, including the private information. Okay, so this is We have only in the next meeting on Wednesday, just we need 10 minutes, 10-15 minutes, and we will finish this chapter, okay? So see you on Wednesday. Any question?
بدنا نحكي عن الأسايمنت.
Yes. Okay. شكرا.